welcome. This is the Financial Inclusion and Financial Health track, so thanks for joining us today. My name is Charlotte Godby here. I work with Equifax, been there over 25 years. In 2017, I actually started a team dedicated specifically on fintech, and personally am very invested in financial inclusion and what we can do to really help more consumers. So thanks for being here today. This is new underwriting approaches to advance inclusion. Have at it.
Great, and thank you to the sponsor, Equifax. We're excited to be here with everybody today. I'm Will Zerbiak. I'm a partner at Graycroft. We're an early and growth stage venture capital firm based in New York and Los Angeles. We're excited to talk. I mean, there's a lot of innovation going on around financial inclusion, and we have a great panel here today. Kurt Lin from Pinwheel. Leslie Gillen from Pagaya and Maria-Elise Stroga from Visa. They'll do their own intros, but we're excited to talk about this and how all of us collectively are broadening access to financial services for more consumers. Maria-Elise, do you want to kick us off?
Just intro, right?
With an intro?
So,
yeah.
Hi everyone, Maria-Elise Stroga. I lead the FinTech partnership practice at Visa. I'm based in HQ in San Francisco. Visa has been focusing on, say, fintech, broadly speaking, for more than 10, almost 15 years now. We've seen it all. I think the good, the bad, and the ugly, and so lots of learning, and I'm excited to share some of that with you today.
Good afternoon. Just so the record, we can't see if anybody's out there right now. It's so
true.
Blinding. I can hear you. Leslie Gillen. It's great to be here. I'm the Chief Growth Officer at Pagaya. After 30 years in financial services, which I like to say I started when I was 7, I joined the fintech world, and very excited to talk to you today about what we're doing at Pagaya, which is a B2B2C fintech company that works with many different partners, and financial inclusion being a big benefit of what we do. So thanks for having us.
It's really funny you mentioned the lights, Leslie, because I was thinking, you know, when you go to the optometrist and they like put the light in your eyes, they're like, hey, can you see? And it's like, no, I really can't. This is exactly like that. So if you're heckling back there, I can't see anything, so go for it. Hi everyone, I'm Kurt Lin. I'm the co-founder and CEO of Pinwheel. What we do is there's a vast world of payroll providers and income sources that have information about who you are, how much money you make, where you work, et cetera. And what we do is we connect into that massive ecosystem, and then through a single API, connect that to banks, lenders, and fintechs, so they have that really valuable income and employment data to build better products, do better underwriting, verify more customers, switch direct deposits, et cetera. So really excited to be here today to talk about how that expansion of data leads to better financial outcomes for consumers.
Great, and thanks to all you guys. I do have sunglasses here, so maybe I should put them on. I mean, it is it is in your face. Well, let's start with Maria-Elise and Visa. I think it would be good to sort of set the stage here and really try to define financial inclusion and how Visa thinks about it, what it means strategically for the company. Obviously, Visa is global and touches consumers all over the world. So, you know, maybe how you guys, if you can just sort of frame the conversation with how you at Visa define it and how you think about it, and kind of it can set the stage for some of the other more deeper dives that we'll do throughout the panel.
Sure. Well, so I suppose there's two factors: this financial inclusion, financial education. Ultimately, the goal out there is to create financial health, right? And the way we define, or why I define what's, somebody who's financially healthy is someone who can afford a $300 emergency medical bill and without having to take a credit line, someone who doesn't have to live from paycheck to paycheck, or simply someone who can save, right? Which, by the way, is not, it's still in America many people who don't even fit that description. So at Visa, the two things we focus mostly on in order to create that sort of financial wealth and health is financial education and financial inclusion. And I think we'll talk a lot about that. But I think it dimensions itself around access to the digital economy, so digitizing your experience, teaching people how to be digital literate, giving them first-hand experience, easy access, sort of experiences that just makes it that onboarding, moving away from cash to digital anything, just making that very, very simple and easy.
Yeah, absolutely. And I think a big part of that is going to include newer technologies, and I think AI and machine learning are at the forefront of what a lot of us are thinking about, and rightfully so. So I think, what Pagaya and Leslie are doing, I think can have a lot of impact as we speak about underwriting specifically, but more broadly speaking, broadening access to financial services. So maybe you could talk a little bit about how, AI and machine learning, apply to financial inclusion, underwriting, and generally speaking, the sort of theme of the panel, and what Maria Elise outlined.
Yeah. So when you think about AI, and obviously the data that you consume within your AI and machine learning is super critical, and I'll touch on what we're doing with that. But Pagaya, we are a network that sits in between a number of partners. We have over 25 partners like SoFi, actually Visa is a strategic partner of ours, Ally, Prosper, a number of specialty auto lenders. And so when you think about traditional underwriting platforms that exist today, they tend to be more inefficient. And what we are able to do with our strategic partnerships and alliances with the likes of a TransUnion, we have over a decade plus of history, over 1,000 variables per consumer behind the score of the entire US population. And the benefit of that is being able to, with the partners that we work with, plugging in an API into their LOS system, and within milliseconds being able to enhance the decision-making process. We're not a lender. Our job is to just enhance the decision-making capability by rounding out what may be things like binary cuts that tend to happen, or rules-based things in traditional underwriting platforms that basically end up cutting out many people who, in the moment, across a number of different asset classes, whether it's personal loans or auto, credit card, point of sale. There's 1.5 trillion in lending that happens, but there's many people, in fact, 42% of people who are declined for credit today. It's because of their credit score. That's the reason that's given. And a lot of times the credit score, so much of it is, 45% of it is about the history that you have, or the debt to income utilization that you have. Well, if you have less credit, you end up having a lower score. And so it's a little bit of a self-fulfilling prophecy. But what we end up doing is being able to have a better perspective in real time, to be able to turn on average 25%, 20% originations, 25% of those declines, we're able to turn them around into yeses in a moment for consumers who are looking to get an auto loan in that moment, or the card that they want, or a personal loan for something that's important to them. And we're doing that in real time. We actually just, we're working with Klarna now as well. And so it's really being able to leverage that AI, not just to be able to holistically see the consumer, but then make sure that we're managing for the risk, as we all need to make sure that we're doing. And we have investors on the other side of our network. So we have a return on asset that we owe the investors who are bringing that pre-funded capital to the table. So that AI, it's really the data that goes into it. It's the partner network as well as the investor network. And we're able to make a big difference. The one last thing I would say about what we're able to bring forward is about 50% of all the loans, we did about $8 billion in loans last year and continuing to grow. 50% of them were under 660. 55% of them were low to moderate income. And these are consumers that we're able to also manage their performance as well. So, and all of that is through that machine learning that we are deploying with our partners.
Yeah, and I think, and 660, to be clear, you mean the credit score is
660 and below is about 50% of our originated loans.
And a very difficult segment of the population to score and extend credit to, and a large portion of the population. I think, one of the things I heard in your response there is alternative sources of data, new sources of data are important with any machine learning or AI model, but anything that's going to be generating a decision. The more data that you can feed it that has signal, the better. So we have Kurt up here who could certainly speak to that around payroll data, and I think that is a very important input to a lot of what could be driving and broadening access to these sorts of services.
Totally. So when you think about credit, there's these two very simple but really powerful questions, right? One is, what is this consumer's willingness to pay? And what is this consumer's ability to pay, right? And so for the first question around willingness, FICO has historically been the measure that people use to say, yeah, they have historical performance, so we feel like they are going to most likely pay this back, right? But I mean, frankly, FICO is, I think, a broken tool. It works only for people who actually know how to use it. And for a lot of the folks who are scared of the credit system or don't know how to engage with it, it doesn't work for them, right? And I realize that the stage is being sponsored by Equifax, so doesn't change, and this is
All of a sudden, his mic
yes.
goes off.
If I get cut off, you know why. So, but in all seriousness, I mean, the reality is, I think people are here because they realize that FICO isn't the end-all be-all, right? There needs to be more. And so we think the solution is getting a lot better at answering the second question, which is what is their ability to pay, right? And the way that we think about that is when you look at the way that we answer that question today, it's largely self-reported, right? You have people uploading their pay stubs or their W-2s, and then you're looking at that and saying, well, hopefully this isn't fraudulent and that this data is accurate, and then we can kind of make some decisions here. But it's a really inefficient paper-based system. And so we're saying we can access all this data across all these payroll providers and through a single API and through a seamless verification process, have that happen right away to be able to make much better decisions. And there's a personal part of this for me, which is I'm a son of two Taiwanese immigrants, and one of the things in Taiwanese culture, I think is actually pretty common amongst a lot of immigrant cultures, is carrying debt is like a big no-no, right? It's like shameful that you owe people money, and it's like you just don't spend what you don't have. And so growing up, or actually when my parents came to this country, they didn't know what credit was, they didn't take out any credit products because they didn't need it, right? And then when my dad went to go get a mortgage for the first time, I remember I was like 4 or 5, I was like too young to really know what was going on. But you always think your parents are kind of like invincible, right, when you're growing up, and then one day you realize they're not. And for me, one of those moments happened where I went with him door by door to try to get a mortgage. And I could see him getting like super mad and frustrated. And this is like the kind of like super traditional Asian dad, you know, that like doesn't show emotions and is like very stoic. And he was like, he was on the verge of tears, right? And I was like what, that memory stuck with me. And I didn't realize until much later on in my life that it's because the system didn't work for him, right? And so if you only had the right data at the right time in the hands of the people making these decisions, you could really change those outcomes.
Yeah, absolutely. And you know, the immigrant point is a good one, and this can kind of dovetail into how your customers define success, right? Because I would imagine your parents were probably very credit worthy, right? And it was just this sort of rules-based system that had been in place for so long that makes it very difficult to underwrite them, if not impossible. But now we're kind of breaking into this new emerging territory where it would be. But I guess so the question, and this could be for all of you, whomever wants to jump in, you know, how are your customers defining success around this? Do they have a set of targets that they're looking to hit in terms of new customers that are, you know, outside of the traditional credit boxes that they're trying to, you know, bring in and provide access to their service or their products? Like, can you maybe shed some light on how they're thinking about it and perhaps their ROI and what they're looking to get out of, you know, utilizing your services? And, you know, any of you can jump into this one.
So I'll start. The one thing is there's no every case is different. So in the case of auto, a number of our partners, the dealer experience is super key, and the ability to have a completely frictionless experience. And actually the best time to be a partner with Pagaya is in times like this, in more volatile times. Bless you. Because as underwriting, as they're pulling back, we're able to fill in. So one measure of success is obviously to continue to deliver for the dealer, or on a personal loan side with another bank that we work for. making sure that with their deposit customers that they're actually able to deepen the relationship and not say no to a customer who's been there for a really long time. And so if we can increase their approval rate by 25%, not only is it good, to your point, they're also looking at the revenue because they can monetize that customer further. They have a higher CLV, but they've already spent the marketing dollars. And they have this person in a branch or online, and to be able to increase your ROI, reduce your cost of acquisition, and do that without taking on any risk on your balance sheet. It's like, I always say there's like no silver bullets, but this one's pretty damn close. So again, everyone is different. I think financial inclusion is also, especially with the banks, is extremely important. Post George Floyd, everybody had, frankly, the whole country, the ecosystem has a mandate to improve, some of the systemic issues that we have. And obviously, if we're able to turn around declinations by 25+%, it's emblematic of there's opportunity in the inefficiency that happens today. So the inclusion aspect is also very, very important for banks. So for us to be able to lend, incrementally to LMI, area, 30% of our loans are for LMI area. That's a very big deal for banks who have a CRA commitment. The last one I would give you is obviously Black and Latinx communities and being able to provide and deliver services at a better clip as what we've been doing historically. 40% of the declinations we actually see from our partners are using the industry standard model. We can tell that they're Black and Latinx, 40%, which is over-indexing on the population at large. And 37% of the loans that we deliver, the issued loans that we deliver, are Black and Latinx. So, by the way, that's not just Pagaya's story. Like, the whole point of those partners, it's the partner story. We're thinking about, there's investors who want to be able to invest in an ESG, type of fund as well. So it's different. It's different by asset class, but the bottom line is, one, making sure that you can deliver for your customer. So that's like paramount. And then being able to monetize, spend that you've already had, and then having that third piece be the financial inclusion. Like, that's really the three legs of the stool, I would say, for our customers, partners.
But on that point, though, so you mentioned the 37%, rate of approval for Black and Latinx. Like, that's actually really profitable for that. Like, can you kind of sort of walk through that, right? They're declining 40%. How much of that lift, like, that's good credit. Those are credit-worthy customers that have come through the door that they've spent marketing dollars against. Like, there's real ROI there. Like, it's not just a feel-good, inclusion story.
And
right?
I think that's just broadly speaking. We all know that financial inclusion is, first and foremost, it's very good business. And so we're able to prove that. So, you're absolutely right. These are people who, the example you gave earlier on FICO, obviously, like an Equifax or a TransUnion, or an Experian, they get FICO just alone is not the answer, because there's a lot of products and services to be able to expand into that. But to be able to increase your ROI by reducing your cost of acquisition, and do that because you didn't have to spend anything more, right. It creates amazing profitability.
Yeah, absolutely. Well, Maria-Elise, you touched a little bit about the literacy component of this, which is a very important one. Can you talk a little bit about what that means? And it's one thing to say, okay, we're going to have all these alternative data sources and be able to underwrite better and bring people into the fold when it comes to new financial products or existing financial products. But, like, how do they learn about it? How do they do it in a responsible way? Right? You don't want to overextend credit. You don't want to put people in precarious positions. We've seen how that plays out. So making sure that they're doing it responsibly. How do you think, both from Visa's perspective and a general market perspective, you do this in a way that people are doing it, they understand what they're doing it, and they're doing it the way that will ensure their long-term, success?
To your point, what's the point if they don't have access to the tools that give them, ultimately those solutions, and worse, they don't understand
Right.
them. So I think on the first piece is, I think that the first driver of financial health, as I mentioned earlier, the whole point about the education, the way Visa has at least dealt with that and the bets they've placed has been really to invest in that as early as possible in your literally personal journey. And I mean schools, right? A lot of investment the last 30 years spent in developing resources and user-friendly, literally games, video games, for God's sake, that middle schools and high schools can play. I don't know about you, but I have a teenager who, unless it's whatever I'm talking, unless it's on the screen, he's not going to learn, or at least worse, pay attention. So, Visa's partnered with the NFL and the FIFA to produce literally video games, financial soccer, for God's sake. I'm French, so that's right up my alley. And football, and well, no, soccer, thank you. And so the whole idea is that you let the kids just choose their team, play the game, but they can't literally score goals unless they answer, simple questions about what is a bank account, how do you become, credit worthy, what does borrowing mean, what are the implications of it. So it comes with sharing the what you can do, but also how you should be doing it. So pretty proud and excited about some of these that I mentioned. And then, once the education is there and early in the journey, including the schools, the students, the teachers, the communities, we tend to partner as locally as possible with institutions to kind of localize, if I could call it that way, the sort of the next phase, which is the access, right? And so access for us is primarily digital economy access, with the simple statement: the more people can access, digital tools, the easier it is for them to earn, save, borrow, and, or worst case, just simply receive sort of that remittance transactions and keep the money and put the money to good use, as opposed to a few banknotes underneath a mattress. So it's a combination of that education piece, catching people as early as possible in their journey, and then leaning on our partners, because we are a B2B company, right? We really sort of work closely with the partners, the Remitleys of this world and many others who are deeply rooted in those minority type of led community, in order to help change and transform those underbanked, non-banked, and underfinanced.
Yeah, you had a really great question, which was like, how do customers measure success? And I think one of the things that we observed is, like, a lot of our customers are the consumer fintechs and the neobanks out there, right? Yeah. So the Cash Apps, the Chimes, the Currents, the Borrows, the Acorns, et cetera. And it's a really fascinating shift, because the whole premise of why they exist is that the number gets quoted somewhere between 20 and 25% of people are either unbanked or underbanked, right? So the system just doesn't work for them. They're either too expensive, or it's actually like more expensive to have a bank account than to not have one at all, right? And so these neobanks came up and said, hey, what if we can actually provide a bank account for these people who are underserved without all the ATM fees, overdraft fees, minimum balance fees, processing fees that make it too hard for them to actually have an account. And the only way that product and system works is a fundamentally different way of monetizing, right? Because if you are a big traditional bank, you get that person in and you start to upsell them into an auto loan, a credit card, a mortgage, and that's a proven business model. Yep. But for a lot of these folks who live paycheck to paycheck, there may never be a situation where they ever it's sad to say, but like it may be a very long time before they're actually able to get a mortgage, right? And so what do you do to build a business that can support serving these underserved people? And that's when you have to start building tailored products that are designed to solve their problems, right? So one of the topics and products du jour has been earned wage access, right? How do I get someone paid every day because they work every day, even though their paycheck comes every 2 weeks or every month? And one of the things that we realized was wait a second, we connect into all of these different payroll systems. We have real-time access to know when you've clocked in, when you've clocked out, how much money you make, and when that paycheck's gonna come. And we can put that data into the hands of service providers to actually enable true earned wage access to get your money every day like you deserve, and not have to pay some, payday loan fee in order to get that money that you already earned.
And that's only enabled because you have the access to this different type of data set. On that point, though, so what is...
Yes and no, though. It's
Okay.
not just the data, right? I think what's so fascinating about how fintech have accelerated that journey towards digital economy and inclusion as a consequence is also their focus on UX, like the user centricity, customer centricity, enabling personalized, as you mentioned, tailored solutions, which the traditional banking system has not been able to do and to scale. So last year we launched a partnership with Totem, and small neobanks focused on one community, Native Americans. There's none others that do that. Why? Because there are 3 times more not underbanked, non-banked people within Native Americans communities. So again, it's inconceivable that a larger institution, tier 1, tier 2, would even have if not the vision, but the tools and ultimately the technology to be able to adapt. And that's, I think, is what, amongst other things, unlocks those opportunities and the inclusion that follows.
Yeah, I think it's a good point, and we've seen a lot of these sorts of neobanks that are, you call them vertical, but around different segments of the population pop up and do well. And I think a point you touched on too, earned wage access. How do you think that factors into the ability? Increasingly, we have a gig economy, right? We have people that their careers are based on the work that they do with Uber or DoorDash and on and on. How do we create an experience for them? Maybe you can sort of touch on some of the work that you might be doing there so they can have access to the financial products and services that we're all used to, despite the fact that they might not necessarily be a W-2, and working in a traditional sense.
Yeah, it's a great question. So it's actually one of the things that worries me the most about inclusion as we look into the future, because if you think about the history of employment in this country, it has largely always been that the foundational unit of work is time, right? So even if you are not an hourly worker and you're a salaried worker, if you look at your pay stub, they take your salary and equate it to an effective hourly rate, and then multiply it by like the 80 hours that you worked in 2 weeks and pay you your paycheck. So that's the way that it's always been thought about, and that's how the machines and the underwriting models work. But what if the foundational unit of work is a Uber drive or a DoorDash or a Instacart transaction? How do you start to take a very different unit and be able to apply the same level of analysis and understand, is this person creditworthy? Do they have the right income? What's the stability like? And so, we find it really important to ingest those new types of data and then sit there with our data science and data engineering teams and say, how do we structure this in a way that can still be consumable and valuable to our partners who are trying to make really important credit decisions in a way that doesn't have to completely upend the way that they feed their risk models and how they actually do what they do. And it's hard, right? There's no perfect answer here, but I think the more we can do to put it into a structure that is familiar to our customers, the easier that it's going to be. And that's a lot of what we do at Pinwheel.
Yeah. And then, and I think it's really amazing that this is being enabled. As with anything, when you have new innovations like this, I think this is very disruptive. It's not incremental. We are broadening access in a very meaningful way, but there's always things that stand in the way. And you can think about things, regulations, rules around privacy, how data is handled. Maybe for you, Leslie, as you think about it, especially in AI and ML, there are certainly a lot of things that can happen. Decisions could be rendered. You need to go back and look back as to why, where was it in the data that led to that. What could potentially be a hindrance to this and create friction in the process, in the sort of journey to broaden access for a broader swath of the population?
Yeah, so actually, I love the point that you brought up about regulators, and it's not to say, obviously regulators have a really important job to do, but regulation is a big laggard to innovation, because it just the innovation's in front, and it always will be, and that's okay. But I think there has been some pull from regulators. I think sometimes administration to administration, it changes things. But being able to have offices of innovation within the regulators' offices so that they're actually bringing fintechs into large ecosystems to be able to enable more inclusion is just, there's not enough of that happening. And I think some of it is just there's misconceptions and there's a lack of understanding, and there needs to be more education in a big way, and really just a better, almost like the language between regulators and banks and fintechs. We need to speak the same language, and we don't yet. And so I think we have to just all be mindful of that and make sure that we can continue to show the data, like let's live in the facts and show the fact that you can bring people into the mainstream economy with the same mainstream products and be able to get, performance that is like within benchmark, and all of that is because of the data. And so, short term, we only use FCRA compliant data in order to get through all of the bank model validation processes, because the banks need to be able to sit across the table from the regulators. So I think their time, hopefully, even though we don't have time, because people every day are walking into the branches and they're online and they're getting missed. And so that to me is like one of the biggest challenges. I think we can all do more, come to the table and make sure that regulators are pulling on fintechs to help. You guys play a huge role. The bureaus play a huge role. Like, you guys have partners that are both fintech and banks, and you do that today. That's the whole reason that, Visa's walking Pagaya into banks to introduce a fintech solution, which we wouldn't have been sitting in half of those meetings. So I, applaud Visa for doing that. So it's not just government, it's also, some of the public sector leaning in and having that collective vision.
Yeah. Really interesting. Well, I think, do we have any Q&A?
We have one question. There are, if you got the QR code, or if you want, I have a mic, we can do questions. Sorry. Does anybody have questions? I have one on the screen. What innovations are happening for small business lending, given 80% of U.S. businesses are sole proprietors who don't have W-2s? Small business lending? Anybody?
You guys want to take that one?
I can try.
You took a little bit of it with the gig economy point.
Yeah.
But that's,
What I would say is there's all different types of small businesses, but one of the most prevalent ones is sole props, right? Sole proprietors. And I remember at the beginning of COVID, a bunch of folks reached out to us and said, hey, like, for all these PPP loans, we are just trying to figure out, like, what these people have in payroll, what kind of information, like how big are they, all this stuff. And it just really highlighted the need that we needed better infrastructure connecting where that data sits in these payroll systems, or in even like back office accounting systems, what have you, to the financial service providers that are going to actually be able to like provide these services, right? And so you can still take the same concept that Pinwheel has and apply it to the other side, which is to say, think about a company as if it is a person, right? And so it's the same core concept around really getting the full picture of all the information that exists there. How many employees do they have? Where are they? What types of employees are they? How long have they been there, et cetera? That are really important components to actually being able to expand access, because historically it's been much more about, well, let's look at the P&L, let's look at the cash flow, et cetera, and that's not the full picture of what you really need to understand how to lend to those folks.
We're also seeing some innovation in that space, especially fairly recently, around the lead time that it takes from authorizations up till when the funds are actually into your bank account and we can start spending. Right now, one of the biggest source of frustration is that it can take you, weeks to get an approval, and then days again to get to see the money. I mean, we're living in the 21st century, for God's sake. So if you can pay someone instantly on Venmo, why can't you get the $5,000 that's going to make or break your
no, literally. I mean, that amount of capital can,
correct,
in a certain amount of time.
And think about let's push our vision on what's a small business. Think about spaces like and we're venturing a little bit beyond the topic here, but creators in the social commerce space, right? For them who are living in literally sort of a high momentum virtual world where everything can happen in a matter of just minutes or hours, the ability to be paid or to receive adequate funding and be able to reinvest it almost instantly and for the most part entirely back into the business is critical. So we're doing a lot at Visa in that space in terms of shortening that payment cycles so that instead of days, we're talking about near instant payment, both domestically and cross-border.
Yeah, it's fascinating. And I think it goes back, I mean, data is certainly a huge, underwriting businesses in the similar way to consumers, right? If you have a founder of a small business, of a pizza shop that doesn't have, a bunch of credit history in a similar way that they have to guarantee the business, you're going to need that data and these new creative approaches to underwrite. The next question, what benefit to employers, what is the benefit to employers when they help supply payroll data? There must be tons of benefit to retention, labor savings for HR, reduction of PII risk, et cetera.
I have a sneaking suspicion this is someone on my team planting this question. So thank you for whoever did that. Without tooting our horn too much here, I think the broader idea is that when employers sign up to share this information about their own employees with services like Pinwheel, it leads to the better financial outcomes that we're talking about for their employees, and then it in turn allows you to translate that into the second order effects for the business, right? So if you are able to access a cheaper interest rate on a credit card or a loan, you're able to access a different kind of bank account that is actually serving your needs only through that employer because they've enabled that access to your information. That's a major reason why they stick around, right? And so we see this, a lot of our friends at these gig platforms offer these embedded financial services because if you offer them this thing, then they'll continue to be a DoorDasher or they'll continue to drive for Uber, right? And so there's a really important component that it helps the retention piece and engagement for employees, especially in high turnover jobs. And then on top of that, that then leads to reduced costs for the employer on the HR side, as mentioned. So,
yeah, well, really interesting. And I think some of the regulatory aspects that you touched on earlier can certainly enable this. And a broader set of the constituency is going to be working in this sort of gig capacity. So how do we, unlock that and show that they want their votes ultimately. So demonstrate to them that there can be economic growth, there can be a whole set of, benefits from, broadening the aperture of who can tap into these services. Well, looks like we have about a minute left. No more questions from my side. Really appreciate everyone's time on this, and hopefully it was informative, and hope you're enjoying the conference. Thank you very much.
Yeah.
thank you.